you should get out of the stock market, like today. You should absolutely get out of the stock market. You don't know what coronavirus is going to hit. You don't know what's going on. Let me explain to you later in this video. All right? How's it going, world? This is Sophisticated Investing Life, and today we're going to discuss why I think you should get out of the stock market right now. Right? So, I'm going to explain these things from historical perspective, some of my learnings while being in finance so far, and just explain overall. Since we don't know when the coronavirus is going to actually get, its wave going to move on. You don't know when the cure is actually going to come. You might be better off going and getting out the market now because potentially more losses to come. All right, so for those who don't know, I studied finance in college. I've been in finance ever since 2015 when I graduated college, my various jobs. And a lot of the things that I've studied and picked up on was when it comes to these moments, well, first and foremost, the stock market does not like uncertainty. Let's just say that. The stock market does not like uncertainty. Whenever you talk to, for example, financial advisors, they talk about risk in terms of volatility, right? Volatility is another word for uncertainty, okay? One of the reasons why some of the companies that are most volatile in the market, because there's a lot of uncertainty around them, right? So let's take the cannabis stocks, for example, right? Because you don't know what's going to happen in regulatory, you don't know when these companies are going to actually make money, you don't know all these different aspects. They're super volatile. The stock market, the stocks actually move up very high very quickly, or they move down very high very quickly. Tesla's another stock, right? Tesla's another one. You can check out my thoughts and other hedge fund managers' thoughts in the card above. Tesla's another name where you don't know what's going to happen with Elon Musk. You don't know if they're going to actually hit numbers and production issues and all these things, right? So the stock can pop up very high very quickly and come down very low very quickly, right? So usually stocks that have a lot of uncertainty have a lot of volatility, right? And that's why they move up and down a lot. So that's why we think in terms of volatility, like when you learn as a financial advisor or just finance in general. Now, from a market's perspective, one thing that always kept everything running smoothly over the past couple of years is that China is going to grow, right? It's going to grow, and even if the rest of the world slows down growing, China is going to carry the growth for the rest of the world, right? Like economically speaking. And now with the coronavirus hitting China, hearing reports where people, like the streets are empty, right? Absolutely empty. And you don't know when they're going to actually finish being empty and people are actually going to go back to work, right? Because there's legit fear in the market, right? In China, in Asia, and now in Italy, here in the United States. And when the bad stuff actually start hitting American companies, and now American companies are out here like, we're not going to hit our numbers for the quarter. Oh yeah, all hell broke loose. All hell broke loose, because now it's like, now we don't know if these companies, we don't know how profitability is affected, we don't know how company performance is affected, yada yada. Like really big issues. Also, from a stock market history perspective, what tends to happen is high volatility comes in spurts, right? It's this thought of volatility goes down like it's going down the stairs, but it goes up like it's going up the elevator, right? So that's why you saw volatility just spike in the market, and after volatility spike, it's staying spiked, right? It's staying elevated because there's so much uncertainty out there. So while there's a lot of uncertainty out there, it's always thought that you should get out of the market, because all it takes is a little bit of things to go just a little bit worse than they are today. The market's just gonna fall, right? The market's just gonna fall, and you're better off just waiting till time calms down, the market calms down, more market participants get back into the market, stock market goes up for a little bit, and then get back in. There's a lot of people who make the case that you should stay into the market, right? Stay in the markets, don't time it, stay in. And the famous case of, if you got in and out so much, if you missed the 10 best days in the stock market overall, those make up probably like 80% of the stock market performance over time, right? Some crazy stat like that. Well, you can also make this counter argument that if you just missed out on the 10 worst days, you'll be much better off. Or best argument is you missed out on the 10 worst days, and those 10 worst days also coincide with the 10 best days. You're a little bit better off, actually. You're a little bit better off. So what I did right now, and it's mainly, I'll talk for my options portfolio, since that's what I primarily discuss now is I put on some trades. It worked against me. I talked about that more. Check out the video on the card where I talked about my losses at the tail end of February. Beginning of March, I'm actually up 11%, like unrealized, which is kind of crazy because it's not like I had a lot of like winning trades. I only had 2 trades. One I lost a lot, one I made a little, but I'm essentially out. I have no positions open right now, and I am just waiting, right? I'm just waiting. I could take some risk. I could actually put on positions if I really wanted to, but I'm like, what's the point? What's the point? As soon as the stuff clears up, the floodgates are going to open up for me. All the stocks are going to be viable, and things are going to be great. I mean, we don't know what's going to happen. This could literally be the beginning of this recession, right? And you know the stock market got much further more to go, going down, right? Much more likely for the stock market to go down than up right now. So my recommendation to you all, I mean, you don't have to listen to me. I mean, I'm not necessarily a financial advisor. I don't have credentials, but my recommendation, if you want it, is to get out right now. Wait until uncertainty starts to creep back up, right? When a lot of companies start reporting like, hey, the coronavirus isn't affecting us like it used to. You know, things of that nature. When that starts to happen, get back in and get back in with a vengeance. All right, that's the key. Get back in aggressively. All right, be aggressive. Put on your long-term holds or get back to trading, and that's how you make it happen from there. Now, if you're in the short selling stocks or if you're in the selling call options, this is probably it's fine for you too. You know, it's not that big of a deal. Maybe I need to look into it myself. But as of right now, I am definitely out of the market and just waiting. That's all I have for you all today. If you are interested in more of this type of content, just made a video about just the basics of options trading, and actually one direct you to option prices, because that's one thing that people really don't talk about, and it gets really complicated very quickly. How option prices move around, like how do you explain what's a good price, what's a bad price? So check that video out in the card. I'll see you at that one. Stay sophisticated.